Hello and welcome, everybody. Good evening, and thank you so much for joining us on this Thursday evening to have a discussion about something that's been the talk of the town, if I may call it, for a while now. Before I begin, I'd like to start by acknowledging the traditional owners of the land on which each of our participants from Australia are, and recognizing the continuity connections to land, waters, and communities. We pay our respects to the cultures and to elders past, present, and emerging. Starting something new is rarely simple. The path seems unclear, the rules feel endless, and every step comes in with a cautious, am I doing this right? For the new reporting entities entering Australia's AML CTF regime, compliance can feel just as uncertain. It's easy to lose the thread among AUSTRAC enrollment, KYC checks, obligations. As our intention over here is to burst the bubble of this confusion, and is why RapidAML, along with our esteemed speakers, have come together to join this conversation about the first 90 days, enrolling with AUSTRAC, standing up your AML CTF program. Joining me this session are industry experts Chapman and Manish Ghiya, and as we look forward to a very interesting conversation today, I would like to begin by saying thank you so much, both of you, for giving us your time, and I am hoping that our participants will be ready with their notes and pens to make a lot of notes from the discussions that we do today. Um, Let me go ahead and give this group a few minutes to join. As we've started, I know we're expecting a lot of people to log in. So I'd like to give them maybe 2 more minutes before we get going with our discussion and begin with the introductions. But thank you so much for everyone who's already joined in, and stay tuned for the next 2 minutes before we kick this discussion off. Great. Thank you so much for all our attendees who have joined in. I know we're expecting some to join us through the course of this discussion. So let us begin. And what an honor it is for me to get a chance to speak with all of our participants and, of course, our esteemed speakers. I am going to attempt to capsulate their vast experiences in a few lines, and bear with me, to be honest. I think both of them have done so much work in their careers and still continue to provide such interesting insights to everyone that they work with. To go ahead and start with the introduction of Chapman. Ob has been a career banker with over 42 years of professional experience. In his last role at Westpac Banking Corporation, he was responsible for managing a portfolio of functions, including fraud control, physical security, BCS, and ATM services, as well as managing the group's compliance for AML and CTF legislation. Since his retirement, Ob has been consulting in both public and private sectors, not only in Australia, but also internationally. The client base for which OP provides financial crime consulting services now since retirement and the independent audit services include international and domestic banks, wealth management firms. I can go on with all of the industries that he works with. OB is also the founding member and co-chair of the Association of Certified Anti-Money Laundering Specialists, ACAMS, Australia Asian chapter. He is also the recipient of the ACAMS AML Professional of the Year Award at the 8th CAMS International Summit in Las Vegas in 2009. I could use another 5 to 10 or even the entire session of the webinar to share with our speakers all of your experience, but we are truly honored and obliged to have you join us today. Thank you so much.
Thank you very much, Neha, and I'm looking forward to the discussion with you and Manish, and hopefully we can convey to the audience some real practical messages that they can take away and apply.
Wonderful. Thank you. Manish Ghiya, joining us in this discussion today, is the principal and founder of Compliance Advisors. Manish is the principal and founder of the company, which is an Australian-based advisory firm specializing in AML, CTF, and financial crime compliance. He has more than 30 years of experience across regulatory compliance and governance in financial services, including around 20 years focused on AML FCC. Manish has held senior leadership roles with leading organizations both in Australia and India, including Colonial First State, AIA, BitTrade, which is now known as Crack in Australia, a DCE. He also served as a board member and programming director in Sydney at the ACAMS Australasian chapter, curating and delivering contemporary AML FCC learning programs for the chapter, in person events in Sydney and Canberra. A regular speaker and moderator, Manish is CAM certified, a fellow Governance Institute of Australia and the Institute of Company Secretaries of India, and a law graduate from India. Through his advisory services, he also leads India focused regulatory and compliance consultings in the similar workspace of financial services for compliance. Thank you so much, Manish. It's an honor to have you join us. And we're really looking forward to some valuable insights from across borders that you've had the experience for. Thank you for taking the time to join us today.
Thank you so much, Neha. Really pleased to be here with all the audience here. Thank you so much.
Wonderful. Great. So I'm going to get this discussion going because we have our attendees and they're going to be coming in. I would like to encourage our attendees to please use the Q&A tab to drop in your questions so we can keep bringing them up in between the discussion. We're also prepared to, lead into 15 minutes, 10 to 15 minutes post the webinar time as allotted in case we have more questions that we'd like to answer at that point, or we would get back to you with responses as well. So, and Manish, right? Tranche 2 regulation, there's so much conversation around what entities should be doing, all the guidance notes and all of the learning documentation that comes out from regulators themselves, everything that's going on. I think it's going to be interesting to dig into the details and specifics as to what it's going to actually look like for Tranche 2. What exactly must Tranche 2 entities do first to enroll with AUSTRAC and when? I know there are timelines mentioned. Tranche 2 businesses are required to know dates like the enrollment dates, AML obligation begin date, which is the 1st of July 2026. The application that needs to be within a certain timeline since when the regulated services need to be, having their processes in this. Help us clarify everything that they need to be prepared with in terms of necessary documentations or avoiding risks. So your thoughts from each of you, Ob, I'd love to hear from you first. In terms of enrollment process and timelines, what is it that you can kick this discussion off in terms of the guidance around the very first step that the organizations need to be looking at?
Yes. Can I start by suggesting that because we're talking primarily about Tranche 2 entities, this is brand new for many of them. I'm not going to be rude, but I think it'd be fair to say some have never ever thought about anti-money laundering before. They're there and they're doing their business. If we take a real estate agent, for example, their business is about helping people sell properties and helping people buy properties. And that's what they do. They're not thinking about money laundering. They're not thinking about terrorist financing, etc. So this is going to be a challenge for many of them. And the reporting entities are in a wide range of organisation sizes. We've got big entities and we've got mum and dad, if I could put it that way, little businesses that will be caught. So I'm going to suggest that, like anything that's new in your business, you actually need to think about it as a project. Do a little project plan. What are the logical things that I have to do? Now, AUSTRAC has set out a timeline for us. The Act itself was passed in late 2024, and so it's there. And AUSTRAC actually has on its website a copy of the future AML CTF Act. It's there. It's got all of the requirements that people will need to comply with. In August this year, they issued the final version of the AML CTF rules, which are also legislative instruments, and they must comply with what's in those. Now, when I say that, they only comply with the things that are relevant to their business, obviously, because some of them will not be required to do certain things if it's not part of their business. Just a few weeks ago, AUSTRAC issued the general guidance, very complex, I'll give AUSTRAC real credit here, because every time you read it, even though it's a difficult document to track through, they've given all the references back to the legislation, which is most instructive. We can expect at the end of January to see the model template AML program for small businesses, which AUSTRAC is very generously creating, as well as sector-specific guidance. And that's terribly important for tranche 2. So there are people that are putting it off and saying we'll wait for all that to happen, but there's many things you can do now. And before I go any further in suggesting that, perhaps Manish might like to add a few thoughts there.
Thanks so much, Ob. That's really a wonderful start, I would say, giving some great insights there. I would just take the audience to a little at a higher level, in the sense that AUSTRAC comes out with a priorities document. AUSTRAC, which will be your new regulator come 1 July, comes out with a priorities document. And one of the priorities AUSTRAC has laid out is that REs, the new REs, that is, or the new reporting entities, they understand their obligations and have a program to manage their money laundering, terrorist financing, and proliferation financing risks well. So that is something which is already written there. And I think at this moment, AUSTRAC is taking such a huge number of, I would say, initiatives to really make everybody aware, increase the awareness in the ecosystem, giving the guidance and things like that. The law is already in place, as Ob mentioned. So that's where the regulator is coming from. And I think that is something which the new reporting entities, it would be good to keep in mind. And this is also a regulator which has been pretty active over the last couple of years. You might have probably heard high profile case in the past. At that point of time, you must have probably dismissed it, nothing to do with you, but probably now it is something which is relevant. So I think that is a context in which the AML CTF regime is coming. The second piece of insight I can give, if some of you know people from the digital currency exchange industry, which was the last one to come under a similar regulatory regime back in 2018, and I was the one helping one of the DCEs set up their initial compliance program. Maybe some of their insights and guidance and experience also might help you. Having said that, I think we have time until 1 of July, when your AML program must come alive. Is it a good time? I think it's not a bad time, in the sense that there is enough time. And but for people who are not doing something, not thinking about it, not taking steps now, you will run out of the time, because it is as Ob mentioned, it's a complex area. It is something where you need to really create your understanding and awareness. And then there are many other elements. There are nuances of, it may seem simple at the outset, but there are nuances. Just to give an example, getting your designated services right. What is the scope of your designated service? Very important. There was a mishap which happened at the time of DCEs or a couple of years back. And hence, again, I speak from what I have observed in the environment.
Right.
Just to give an example here, a bullion dealer who is already an existing one and who is also doing now precious, the calibration of what is DS in the case of a bullion versus what is DS in the case of a precious metal is not same. So getting that right is extremely important. And then there are whole elements. We'll probably talk about it as we go along.
Thanks,
So
Manish. Ob, your thoughts.
Yeah, I do. Thank you. Manish has raised some very interesting issues, but let's go back to that top level again. We know that AUSTRAC has put out a timeline. One of the timelines that is that tranche 2 entities can commence their their enrolment with AUSTRAC from March.
Yep.
Their go live date is 1 July. So
Yep.
they're 2 dates that you need. So what are we going to do in those 90 days? Well, can I suggest that the first thing, if you're looking at a project plan approach, was, do you actually understand your business? Because you're not going to be able to pick out what designated services you're providing, which is why you have to be enrolled and comply with the legislation, unless you actually have a blueprint of your business. Do you actually understand who your client base is? Do you actually understand what your products are? Do you actually understand the jurisdictions that you operate in, etc.? And I think that's extremely important as a starting point. Do a blueprint of your business. Then you'll be able to map that against the legislation, the Act itself, to identify which of the designated services in the various tables you will actually be providing once you become an enrolled entity and becoming a reporting entity. So I think that's the first step. I think as part of that, in doing this mapping of your business, you can get back to those project principles. Have I got budget? Have I got an owner or a sponsor at the top of the organisation who will champion the cause at the board and executive level? Do I actually understand what resources I will have available to do all of this preparatory work? Because I've still got business as usual. I've still got to run my business today. And I think these things, these buckets, if I could call them that, are extremely important to put in place right now. You mightn't be able to expand them out in great detail, but at least you've got these buckets. These are the things I need to think about in the first 90 days.
Yeah. No, thanks,
Let
Rob.
me
That's
just
very helpful.
add
Yes.
very quickly a few bullet points there. So as just building on Ob. So you have, again, reiterating what Ob just mentioned, you have everything what is required today to build your AML program or to get compliant with the rules. So that was not going to be an excuse when the regulator later comes that, why didn't you get going? So you have everything. You have the act, the rules, there's plenty of guidance, and there are plenty of events happening as well, including the industry efforts. I think one thing very important to note is it is not just about entering into a new regulatory regime, but it is as much a culture shift for your organization. The life before and life after would be different. You need to, for example, if you launch new products, new services, new piece of technology which faces the customer and things like that, ensure that you have done a risk assessment, or you know what the risks are, you have the mitigants in place, or that is something, one of the key requirements. So people just need to kind of be able to appreciate, what does it mean to now be having a business where there is an AML or money laundering controls and things like that. So I think that is something which is very important, and that includes people who are adequately trained and are aware. You have a good compliance framework. Even something like, AUSTRAC's one of the other priorities is, are companies filing their suspicious matter reports adequately or not, considering the size? And that is something. So if you thought that you don't have any money laundering instances, maybe look at your framework again. Just to give a small insight from Australian Federal Police's report, the biggest asset seizures are in the real estate industry. So that probably tells its own perspective. Yeah.
Right. Thanks, Rob and Manish. I think that was a very important part of everyone getting to understand that they have everything they need to get started with. And this is the time when they used to look internally and understand their businesses better. Let's talk about building a right-sized AML CTF program. Now, AUSTRAC requires a risk-based written program with two parts, which covers one that covers governance, board management approvals, compliance officer, having a risk assessment program, includes staff training, transaction monitoring, etc. And another part that covers KYC, where you verify and how you do it, your customers, beneficial owners, PEP checks, understanding all of that. I'm going to lean on both of you to help our audience know how to address both of these strategic controls and client due diligence processes comprehensively from the start. What essential elements must an SME's AML or CTF program include, and how should they balance these parts to control the first and the second part of customer due diligence? Manish, why don't we, ask you to start with this, and we can hear from Ob as well.
Sure, Neha. Thank you so much. So I think that the phrase "getting it right size" is extremely important. I think people understand, businesses understand what applies to the big end of the town is not the same. What applies to the smaller businesses or even business with a law firm with a 2 or 3 partners versus a law firm with a 20 or 30 partners, the size and scale is not same. That is not to say that you don't have to comply with something. The elements are exactly same. That is irrespective of what size of business you are. But I think there are two things that needs to be kept in mind. One is a risk-based approach. That's the whole AML program always is about risk-based approach. What are the biggest risks that you see unique to your businesses? If you accept cash, you have cash related risks, and somebody who doesn't accept cash, he doesn't have that. So understand what the risks are, understand what are the highest risks in your business, and go for mitigation of them first. So that is a risk-based approach, and that itself takes into account the size and the fit for your business. The other is size, I mean, which goes, the words AUSTRAC uses is size, context, and nature of your business. And just like the way you said, so taking those into account, risk assessment, for example, is something where there are quite a few levers and you can influence them in a right way. That, I will do screening, what to my business context, once in 3 months screening looks right. But there could be a big bank and at the end of the street which does it every day, and you don't have to do it probably. You may be able to get away with Excel based solutions, but somebody may not be able to get away. Again, size, context, nature of the business matters. So I think this is how you right size.
Mhm.
I'm not sure whether somebody who's trying to do it himself can understand everything, but if he can, nothing like it. If you think you need help, go for it. But yeah, that is the and I think the rest of, once you start the regime, there you may have a revelation that, if I'm doing something, I'm overdoing something, and things like that. So I think it is about getting that fit right. AUSTRAC has very clearly said that it doesn't expect you to be 100% compliant on 1st July, but it expects you to be substantially compliant. It expects you to be thinking about it, and you can use some of the weeks and days following that in right calibrating your program.
Thank you, Manish. While I turn to you, I'd love to hear your thoughts on my question, but also with your experience, I'd like to know if you've seen any common compliance failures or gaps in these AML programs, which, of course, the newly regulated entities should, stay away from and avoid. So I'd love for you to encapsulate that in your response as well.
Absolutely. Can I just build on Manish's point to start my additional comments? Manish was quite right. It's actually, your program has to be relevant to your business. All real estate agents are not the same. It depends on what functions they offer. Are they simply helping clients buy and sell? Or are they running rent rolls? Are they doing a whole lot of other different things? When we look at the accounting practices, what are they doing? Are they just doing the tax returns for people? Or are they in fact doing the bookkeeping and keeping all of the ledgers for people? If we look at the legal profession, what are they doing? Are they providing guidance, or are they actually acting in some other capacity? And so I think each entity will have to look at it to get the right size, because a lot of the tranche 2 entities will be small. I think the template that AUSTRAC's issuing or plans to issue at the end of January will be a good checkpoint, because as you build your program, you better have everything in there that's in that template. Now, that's not to say you'll simply pick up the words and put your name into the document. It's got to be modified to your, but at least they'll be the starter set. You must have those. And I think that's extremely important. Your second part of the question was, what do I see as the gaps in all of my experience? A lot of entities in tranche 1, and some of them are from the big banks right down, international, multinational banks and so forth. They have an excellent program. It's 80 pages long, probably far too complex, but they've got everything listed in there. But as I do my audits, and I know Manish can speak for the same thing, I discover that what's actually happening isn't in line with what they've documented in their program. So we have a complete disconnect. And often that can be because what they've written gets out of date. They've changed the system, or they've added a new bell or a whistle to a product and it's changed its nature. Or the operators, the frontline staff, have worked out a smarter way to do things. They know that if they fill in certain data fields, things will progress, even though the policy said you cannot progress until you've collected all of this. And we could go on all night talking about some of the examples where people have put in wrong data, but as long as there's something in the field, the system will accept it. So that's where I see a big disconnect. And I'll add a point that we'll come back to later on. I think for all tranche 2 reporting entities, after the 1st of July, and not too long after, you need to do, in project management terms, a post-implementation review. Are we doing what we said we were going to do? As Manish and I both know, there's lots of enforcement action against major banks where they've implemented something new and never gone back to find out, does it actually work? The Commonwealth Bank's case on the intelligent business machines is a classic example. But we're not here to talk about that. They're just examples of where people don't understand. Am I monitoring what I'm actually doing after I've started?
Right. Thanks, Ab. Manish, we've been hearing so much about the very increasing role that technology is playing in AML globally. Now, based on your experience, both in digital entities, fintech entities, banking experience, what tech-driven practices, for example, digital onboarding, automated monitoring, KYC data sharing, what tech-driven practices from Asia Pacific that you've seen across the board should Australian tranche 2 businesses consider? And keeping in mind, of course, the companies right now are at the juncture where they're trying to understand whether they need to build these solutions in-house or be looking at outsourcing or be looking at RegTech solutions. So your thoughts on that?
Yeah, thanks, Neha. So definitely, I think there is a fundamental difference between tranche 2 entities and tranche 1 entities, and that is about the size and scale. Tranche 2 is quite the bigger end of the town in terms of volume, I would say, would be far lesser versus and the tail end would be the smaller shops and all that. So I think the critical decision for somebody would be, do I have the resources to pay for the X level or Y level of technology? Having said that, technology definitely is a kind of a game changer, if I may say, for AML compliance. It can help you if your business is even medium sized, with quite a few of customers running into thousands or something like that. Technology can become necessary. You'll need technology for alerts management. You will need technology for screening, adverse media screening, transaction monitoring, and things like that. Now, all these things can be done manually, and that's perfectly fine. Again, if I go back to my words, size, scale, your nature, and your complexity of your AUSTRAC is not asking you to have a technology necessarily, but if your context is something where technology is essential, I think that is something then you will be considered not having adequate framework. So that's where the decision is, and this is true across most of the countries, I would say. I have some experience from India as well, and that is true here as well. Similar factors to consider in decision making, and similar, AML at some level is similar across the globe. There's sanction screenings which is similar across the globe. But yes, there are what is AUSTRAC thinking and what is a financial intelligence unit of India thinking. They could be quite different. So in that sense, so I think that is a decision for the reporting entities to take. You should take that decision very consciously. If there are technologies, there are all kinds of technologies, something which you can buy, something which you can run as a software as a service, and things like that, subscription based, whole works, all kind of things are there. So figure out what really works for you, what is within your budget range, or even first few months, you just want to go with Excels and see how's your experience. I guess that's where it will land as far as that decision is concerned.
Thank you, Manish. And Or, as you might have noticed, I like to double down on my questions to you. With respect, I'd love to hear your thoughts about, in-house versus outsourcing versus RegTech.
Yeah.
Obviously, there is a lot of decisions that tranche two entities need to be taking, managing compliance in-house, hiring experts, adopting RegTech tools. And at the same time, there are solutions for sanction screenings, automated monitoring that can greatly reduce manual effort and errors. Um, what's what's it like in terms of how does a tranche two entity look at it in terms of trade-offs, cost versus control, and how to ensure these parts approach the policy in the most effective manner to manage risks?
Yeah, thank you very much indeed. Let me just remind everyone that irrespective of tranche two not being implemented yet, all of the entities that are going to be caught already have obligations under sanctions legislation. And so they presumably are monitoring for their customers and who their customers are dealing with, whether they're on sanctions lists. Now, they might just be using the DFAT list because they're only domestic. They might be using other lists because they have got clients that have some business overseas. That's an obligation now. When we turn back to the AML CTF, and AUSTRAC expectation is that you will do real-time risk assessment of your clients, and that changes over time. So if we can bring that together using technology, we're going to be doing the continuous monitoring of our customer base and who they deal with from a sanctions, and that should be triggering into you need to do the AML risk assessment again on this client because the risk has just changed, the level. And therefore, they'll then drive additional KYC requirements. That'll drive a whole raft of those things that you've now just put into your AML program of the things that are in the program that you're going to have to do, even down to staff training. Hang on, we've just discovered that we've now got a bigger cohort of customers that are tied up with a new sanctions risk. We better do some refinement to our staff training. And so this is almost an octopus with a whole lot of different tentacles, but they all keep coming back to the same head. The more you can use technology, the better. That technology does not need to be fragmented. It's got to be relevant to your business. There's no doubt about that. And Manish is right. There are a range of services out there, subscription through to buy it, download it, build it in-house if you're as simple, because a small law firm, a small real estate agent might only do 300 transactions a year. And their answer is, well, I don't need as much, but I better have some technology to be monitoring all the time. And those things will come in the program. And again, I'm going to go back to say, I think there'll be a great guide in the sector-specific guidance in January, as well as the template program. But technology, to me, has a real role to play, as will AI, no doubt, as we mature in that field, where it can do a lot of the hack work for us and make it simple.
Right.
And
Thank
I'll
you.
just add on that
Yes, Manish.
outsourcing is not just of technology, is also but of expertise. So, if again, for relevant for probably smaller shops or people with no compliance capability in-house, or they don't have the capacity. So it is perfectly all right for you to go out and look for that capability and expertise. AUSTRAC does not stop you from doing that, in as much as it rather acknowledges that sometimes firms may need those capabilities from outside. So that's another kind of outsourcing. There is an outsourcing related guidance which AUSTRAC has given, but essentially what it says, go and get an expert, and that would be perfectly fine. Yeah.
So if we just expand that a little bit further, because I think this is absolutely critical for tranche two. How do I get that? I've only got 6 staff. I'm struggling to describe what AML is, let alone all of these other things that I've got to do. Yes, I'm going to need, do I need guidance? Do I need some expert coming in? Do I outsource it to someone? But remember, AUSTRAC makes it very, very clear. The law is absolutely explicit on this. You can outsource responsibility for doing something, but you cannot outsource the accountability. You are the reporting entity and you will be held legally liable. So if you're outsourcing or you're seeking guidance from someone, a Manish, for example, who's well skilled in giving guidance to entities, the answer is I still am responsible. I need to check this and need to make sure it's right. I can't just say, Manish told me, therefore it's okay. I need to be able to check and balance. The biggest problem that I think a lot will have is they'll be talking to their peers, the other real estate agent, the other law firm or whatever, and trying to duplicate it. But bear in mind, each business has its own unique requirements based on their business model. So it's always those little nuances that you've got to make sure yours is fit for your business.
Great words of, yeah, absolutely.
Thank you, Bob. Thanks, Manish. I think we're obviously hearing a lot about looking inwards, understanding the scale of operations, understanding what works for your business, and what the obligations are with all of the information that's available. And staying on top of it, of course, uh, a, a bit of a impromptu question. I know we are seeing a lot of enforcements by regulators, coming through across industries, and especially if we look at the latest news around everything that tranche one entities and the bigger financial institutions are being pulled up for. There is a very keen leash, a very short leash that the regulators want to have right now in terms of making sure entities are, aligning themselves with the regulatory requirements across what's been laid out. Tranche 2 is just starting their journey, right? I think when I look at it, Tranche 1 sort of is the elder sibling in this equation where they can look up to and understand what needs to be done, what not. Um, if you had to lay down 3 points that tranche 2 should look at tranche 1 for and learn from, whether it is their best practices, whether they are mistakes to avoid, each of you in your experiences, I'd like to hear as to what are the key points that tranche 2 should be looking at from that aspect, because there's already been entities that they've been seeing following these regulations, and and tranche 2 needs to be agile, right? They, as the 90 days that we're talking about, they need to be agile and accepting of the changes that they might have to keep adapting with the new policies and regulations coming their way. um, why don't you start with the 3 key points that tranche 2 should be keeping in mind as they go on this journey?
Yes, the first thing I'd suggest is that they look at the sector risk assessments that are on the AUSTRAC website, because AUSTRAC has done a lot of work. A lot of the entities that are now going to be caught probably can't define their financial crime risks because they've never thought about it. Yet I know what I know, but I don't know what I don't know. And AUSTRAC has done some wonderful work in producing the national risk assessment, but more importantly, the sector risk assessments. And I think that will be terrific guidance for people when they're doing this map of their business to understand, gosh, I did not realise that I actually had risks in that particular area given my current business model, because AUSTRAC has laid that out for you. And Manish made the point before, and it's one that you learn through age and experience and through watching enforcement actions, is why didn't you take notice of what AUSTRAC had put out there? You know, there is no excuse. There's no ignorance claim here. AUSTRAC has provided all this information. Yes, there's a mountain of information to go through. Yes, you might need help to digest it all to start with, but it's there. It's there all the time. There's a lot of press now. 10 years ago, AML would not have appeared, money laundering would not have appeared in the press every week. Now it's almost daily. There's some press article about something to do with financial crime, fraud, scams, money laundering, terrorist financing, child online sexual exploitation, etc., etc. And so people can't claim ignorance anymore. So I do think that it pays you to do this work. Do that map that I suggested earlier of your business, and then have a look at what the requirements are. We've said that the guidance is there and there's more coming, and look at the risk assessments that are already out there. There's a wealth of information which will help educate you as to how I do it, how I build my risk assessment correctly, how I then put in the right controls in the right places so that they're effective, because this is outcomes-based risk assessment, a risk model that they've now got. It's not a matter of just ticking the turn and saying, I do my reports to AUSTRAC. It's, are you actually mitigating and potentially preventing money laundering, terrorist financing and the other financial crime risks, bribery and corruption, environmental crime, etc.
Thanks, Manish. I'd
Yeah.
like to. Yeah.
Thanks, absolutely. I think one of the most critical thing, all the new entities probably may have heard these words and endlessly or many a time, but I cannot kind of understress its importance. Risk assessment is really essential. All the enforcement actions, big cases, small cases you have heard, I think there are two or three things which were common, though the impact of that, reasons for that could be very different in each case. The risk assessment, I would somehow say that, this is an area which even the big ones, the small ones, the medium ones are still struggling to get it right. And AUSTRAC absolutely wants you to get it right. And the other, I would say, is governance. And that would mean that is your senior management sufficiently involved? Is your board sufficiently involved? Do they understand? Is the information going up to them of what the risks the businesses are facing? Giving information about AML compliance program, how many suspicious matters have come in, how many we have reported, something as granular as that, and something as top level perspective of risk management. Have you accounted for all the risks? What mitigation measures? What is the overall risk profile of the business and things like that? So governance is equally important to get it right, because in a manner of speaking, everything flows out of that, as well. So it's a decision making underpinning. So I think getting the risk assessment right is extremely important. For example, real estate sector, AUSTRAC has real estate related guidance going back to 2015. Now, I'm not saying that that may be fully relevant, but I'm sure there are some pearls and some nuggets into that which can be used. And then, as Om says, AUSTRAC expects, or rather wants, that the national risk assessments, there is one on money laundering, there is one on terrorist financing, and there is one on proliferation financing, all released in last 2 years or so. You take into account that there are heat maps given there, for your kind of sector, for your kind of customers, for your kind of channels with which you deal with. What are the risks that AUSTRAC has assessed? And that was a very detailed national exercise. So please do not kind of ignore that. You would be asked, what did you do with the national risk assessment? How did you integrate that with your thing? So there is a national risk assessment. There is a sector level risk assessments, but all the transfer entities being new, probably most of you don't have, but there are plenty of that for transfer one as well. As I said, there is a real estate one, and then your own real risk assessment, where you ask those questions: what are the risks I face? A real estate agent dealing with international clients versus a local real estate again has very different risk signatures, I would say, and hence requires different risk mitigants, and hence different size of AML compliance programs. And that is true for a bullion business, that is true for a precious metals, that is true for a lawyer, a 40 firm versus a 3-partner firm, again different. So I would say risk assessment and governance, I would definitely take into account that as one of the critical areas as well. Training and awareness, because unless you know what you need to know, you don't know what you need to know. So it's that simple as that. Yeah.
So let's now take that a little bit further, because I think that sets the scene very nicely. We've done the risk assessment. We've done that mapping. We think we know where all of our risks are, and we know how they've mapped to the designated service. And now we're writing the program. Part of that program has to actually explain who is responsible for what. Now, depending on the size and complexity of your business, and we're talking the 3 big sectors, it may be one person, because it's only a 5-person business. So you can't say that the owner of the business is also the AML compliance officer, is also the person that's opening the accounts. Whereas if you're a 50-person business or 300-person business, you'll have division. And one of the gaps that I've often found is that everyone thinks it's someone else's responsibility within the organisation. I didn't realise it was my job to monitor the transactions. I didn't realise it was my job to do the investigation and report to the senior person that we may have a suspicion that should go as a suspicious matter report to AUSTRAC. These roles have to be defined, and it's very, very clear in the legislation what the role of the AML CTF compliance officer is. And that role has increased, or rather will increase, with the new regime. And so that needs to be the right person. Again, a real challenge when you've got 5 staff. Not so much a challenge when you've got 500 staff, because you can allocate that to someone at managerial level to be responsible. I think there's a lot of challenges. Can I suggest that another one that's starting to worry me in relation to tranche 2 entities is when you're doing the KYC, sorry, the customer due diligence on a new client, do you actually understand who the beneficial owners are? Where do you get this information? Where can I prove who the beneficial owner of the real estate firm actually is? Is it the people in the shop, or is it someone that's sitting back that actually owns the business but has an office manager and really doesn't have hands-on control but actually owns the business? There's a whole raft of issues here, and of course they'll all need to look at their clients. I'm now taking this client on board, and gosh, they're a good client. We've sold 4 properties to them. They're a real good acquisition, and we're making good money out of it. But do we actually understand who owns those properties? Who's the ultimate beneficial owner? And so I think from everything I'm reading now, I think a lot of small entities will struggle to actually understand where they can get the information, if it's available at all, as to who actually owns the customer. It may not be the person you're dealing with.
Right. Thanks, Ob. Thanks, Manish. I think that's been very helpful. As I launch my poll to the audience, I want to move to the topic of sanctions and proliferation compliance. Now, with new rules that expressly requiring tranche 2 entities and all regulated entities now, requiring sanction screening and PF risk controls. How should tranche 2 businesses incorporate these into their AML programs? We acknowledge that entities need to check customers against sanctions list and consider proliferation risks, which is high-risk jurisdictions. What we're looking to hear from you is a bit more in terms of practicality. While, of course, it's very overwhelming because it's a very huge risk and a very global landscape when we talk of sanctions. But what is it that companies should be starting to look at, whether they start with training on red flags, enhancing their due diligence for high-risk customers, for firms to begin with having a robust process of compliance in place. Companies might be doing it on Excel sheets right now, as Manish mentioned earlier. There's no right or wrong way at this point to start your journey with. But practical steps that entities can take in this direction to ensure that they're not leaving this for the last while embracing it at the beginning. Manish, your thoughts?
Yeah, look, as I mentioned, technology decision is something, I recognize quite a large number of entities in tranche 2 would be, for them, it is a critical decision. Can they take, do they want to buy technology or not? As I said, technology definitely helps do it better. Just drawing on the words of, for example, sanctions. And sanctions is something which is already applicable. It's just that it gets a bit more complex, if I may use that word, come 1st July, because then it becomes part of AML as well. But to ensure that you are not dealing with sanctioned people or jurisdiction, especially for those who have internationalish or business or customers coming from overseas, monies coming from overseas, that becomes an important subject. So at every stage of AML, technology can help you get better and do compliance much better. whether it is customer onboarding, where you can have, fintechs use fully automated process. For example, everything is done by the technology, no hassle. Your transaction monitoring is there. There are tools which can automate, for example, your suspicious matter reports filing as well. But do I want to spend getting that functionality? Risk assessments, there are service providers who can help automate, maybe not be the right word, but a very template driven. Uh, Whether does that reflect your real business's risks or not, that's really up to you to take that decision. So yeah, I think it is something which, take one step at a time, see what is working, what is not, before you make big technology decisions. Maybe that might be the way to go.
So
Okay, thanks.
I
Your
think we
thoughts?
all agree that the technology is part of the solution. There are very few firms in tranche two that could do everything manually. Very few. Um, it's just not possible. It's just not possible. The technology needs to fit their business needs, and Manish has made that point 3 times, and I think it's absolutely fundamental. Don't buy technology or subscribe to technology just for the sake of it. Make sure it's fit for your business. But at the same time, I really do question whether any institution that's a reporting entity, no matter how small, can do everything manually. I mean, if we talk about the silliest and smallest technology, hey, a Google search, that's technology. You're going on and you're using it because you want to look at, is there anything on the net that's adverse media about this client? That's technology. So, we've all got it, but I just think we've got to make sure it's right, fit for purpose, really
Right.
fit for purpose. Budget will always be an issue,
Mhm.
especially for small entities. There's absolutely no doubt about that. Um, don't buy the cheapest, don't buy the dearest, buy the one or subscribe to the one that fits your needs, that will give you a high level of assurance that you are complying and therefore you will not run the risk of enforcement action.
No, absolutely. I think I'd just like to add my 2 cents here is there is one thing as tranche two entities, are stepping into this entire space of being regulated. It's extremely important to understand that there is no cookie cutter model. Just because it works for another real estate entity doesn't mean it works for your business that may be a 2 or 3 member family owned real estate consulting company. Just because it works for the entire different industry altogether, it needs to go back to the points that both you and both Ob and Manish have highlighted, that you need to understand your business, you need to understand what fits you, but also at the same time, I think the question that one struggles with in a small or medium sized business is the cost of compliance versus customer experience. Now, all of the small and medium enterprises are interacting with customers at a very different level than a large financial institution. There's new budgeting requirements to have processes in place, and then to decide between having to move away from your core business, learn about compliance, or should I bring in an expert and bring in the technology so it can take my load away?
Yeah.
And how much is that going to affect my customer due diligence process, which will then in turn affect my customer experience at the end? So I think these are pieces that are important to keep in mind when you are looking internally, when you're looking to build your process, and looking at what needs to be done. Ob, I think you had something to add to that. Any thoughts?
Yeah, it's rather interesting because I've just looked at the polling results of
Yes.
where people see they'll get the most bang for their buck, so to speak. And it's very diverse. Now, that probably reflects the audience and where their businesses are at the moment. Uh, and I find it quite interesting because it's fairly well even as to what people see as the 26%, 26%, 28%, 19%. It says that the audience have a range of concerns, a range of thoughts as to where they think they may get some benefit. in productivity, if you will, out of what they've got to do. So again, that reflects the complexity of what we're doing. There's not a common thought. Some polls we run, and you get 90% of the people all have the same view, and you can say, well, that's clearly the industry thought. But we've got a real mix, and that shows the complexity of tranche 2 entities. So that's
with very diverse businesses, business models, size. It's kind of expected. Different people have different concerns on their mind. Yeah.
And their business, because some of them turn around and say that option is not a big thing for me because that's not part of my business at the moment. But I think it's very enlightening and, dare I say, even instructive as to what people are actually thinking about, and that what we've talked about they should be doing. Go back, do those fundamentals that we talked about in the 90 days. First of all, where's your blueprint of your business?
Yeah.
If you can't explain your business, you'll never be able to map it to the designated services to know what your obligations are. So they're the fundamentals that we've been talking about in these 90 days. There are some hard dates. There's no doubt about that. But a lot of it is, I need to get on with this now. Manish made the point very early this evening, and that is, the law's been out since December 2024. The rules have been out since August. Unfortunately, I think a lot of tranche 2 entities have put it aside thinking, I'll wait until I see what AUSTRAC produces in the sector guidance. But you can do a lot of it right now because you're still running your business day to day and you're doing all of this extra work getting ready for the new world. That takes resources, it takes money, and it takes time. And dare I say, it even takes oversight from your board or your senior management. That's time, that's effort. So a range of things that we've offered, there is thoughts for them. Do I go and get some expert help? Do I look at the technology offerings and see what they can do for me? How can the vendor, if I'm looking at a vendor, how can a vendor actually convince me that their product will do what they claim it does? That's extremely important because, dare I say, there are charlatans that have joined this world. They see this as a golden opportunity to make money, but they've not got a proven product. They've not got a proven service that they can provide as a utility. And so this all behoves the new reporting entity to do their homework.
Right.
Who am I dealing with? And can they actually provide me with real value add?
Thank you so much. Manish, any last advice for all of our attendees on, before we come towards the end of the session?
Sure. I think this is the time. I know the holiday season coming, and nobody wants to kind of, be saddled with the thoughts of doing an AML and all that stuff. But it is essential. Keep it in your thoughts in terms of, at least people who are the responsible people for the businesses, start building something, at least in your mind, that how we are going to solve this requirement. And probably once you're back from holidays, if you're not started already, absolutely get to it, because you will realize that 1 hour is we have just talked at the surface.
Yes.
You'll see when the risk assessment comes out for your business, you'll be surprised that the detailedness of it, the complexity of it, and all the elements that goes into it. So I think use this time up to 1st of July. Get help if you want to get help. Hire people if you want to hire people. Compliance officer is a must. Either you have a specialist compliance officer or AML compliance officer, or somebody's designated, or so you again get someone for that. So use this time for building up all those things. But come 1 July, you need to be up there. I would say.
So if you're not on the journey already, you should be from tomorrow morning.
Thank you so much, Ob and Manish. And thank you, everyone who's taken the time this evening and joined us. I would like to bring your attention to a WhatsApp group that RapidAML manages, who's brought this webinar to you today. I think if you want to stay updated on everything that's happening in this space, you want to be part of this group, so you can go ahead and scan that QR code, and our experts on the back end will make sure that we keep you updated about what regulatory requirements are, what the best practices are, what is it that you can be looking at, and of course, be part of a community that's facing this together. Um, Along with that, if there are any questions or concerns about what solutions transfer entities can use, you can feel free to reach out to any one of us to understand more about this. Each of us available on our LinkedIn pages and our websites, and of course, our presence is across globally. So feel free to use our credentials and reach out to us. Once again, thank you so much. Thank you all. Thank you, Manish, for your valuable insights and this very interesting conversation. I'm sure our attendees took a lot of notes and benefited from this discussion. Have a very pleasant evening, everyone. Thank you so much for your time.
Thank you, and
Thank
good
you,
luck to
Neha.
all of you.
Thank you all. Thank you to all the attendees here. Thank you so much.